Hello and welcome to Nutmeg's Investor Update for August. I'm Casey Lord and I work in the product team here at Nutmeg, specifically focusing on international expansion. And as usual, I'm joined by Shaun Port, our Chief Investment Officer. Hi Shaun.
Hi Casey.
Shaun, we had some market volatility earlier in the summer. Did things quieten down during July?
Yes, Casey, certainly July was a lot calmer than we've seen in recent months in global financial markets. It's not because trade tensions have gone away. Clearly the US is still pushing China and increasing tariffs on Chinese imports, but it's because the US earnings season that we're in has been really strong. So analysts came into this season expecting really good results from US companies. They've actually done better than that, and we're seeing earnings grow by about 23% compared to a year ago. So a really strong fundamental backdrop from companies, for the stock market, which is overwhelming in this rhetoric around trade between the US and China. Now within that, tech companies have produced some really good results, with the exception being Facebook, and that's helped generally tech stocks do very well, and also financial stocks have done quite well. So it's been quite a strong earnings season, really giving the US a lift. So we've seen the US equity market deliver gains of about 3.5%, a 4% gain from Europe, helped by what's been going on in the US, and gains of around 1 to 1.5 from the UK and Japan. Emerging markets have delivered a gain of about 2%. Now within that, what's been really interesting is China. So since the middle of June, the Chinese currency has fallen by more than 6%, which is one of the sharpest devaluations we've seen over the last 30 years in China. The stock market's fallen by about 10%, and we've seen interest rates come down quite sharply. So within this global backdrop where equity markets are doing quite well, China's been quite a big laggard, and it's something we're keeping really quite close attention on.
And against this backdrop, how have Nutmeg's fully managed portfolios performed?
Not surprisingly, we see positive returns in Nutmeg portfolios in July, ranging from around 0.3% up to almost 2.5%. So a pretty good month for our portfolios.
That's great. So have you made any changes to the fully managed portfolios?
Yes, Casey, we've made quite a few changes through July. Firstly, we've swapped out one of our ETFs into a much cheaper version that tracks US equities with a currency hedge. We've written about that on our blog, so you can find out more about what we did and how we did it. So that's quite an important change that's really reflective across almost all of our portfolios. Secondly, in US government bonds, we've sold quite a bit of our exposure that tracks US government bonds linked to inflation because they've become quite expensive, and moved that into other US Treasury bonds. So that's really about valuations. And finally, in Japan, we've switched about 30% of our holdings tracking Japanese large companies into smaller Japanese companies. And that's really anticipating moves by the Bank of Japan to start tightening their monetary policy going forward.
Thanks, Shaun. And this month, our customer question comes from Richard via Twitter. And he asks, what will you be doing in the run-up to the Brexit date next year? Would an impending no-deal Brexit mean that you move all investments out of the UK and Europe?
That's a really good question, Richard, and also a very tough one. So clearly my investment team are always thinking about Brexit. We almost have daily conversations about the different scenarios around Brexit and the probabilities of each scenario. So we're really focused on the lead up to Brexit, not the Brexit event itself, because markets will price different scenarios, and that will change over different time, and that will be reflected in prices now, not when the UK leaves the EU. So that's a constant discussion amongst my team, and we're always thinking about how do we mitigate against the potential negatives from these events, but also how can we take advantage of some of the positives. So we know recently, because of sterling's been so weak, the UK equity market's been doing quite well. So these things really are factors within our decisions. So we'll be making those changes in the lead up to Brexit rather than waiting till the actual event. Now, more recently, we judged the probability of a hard Brexit had gone up, actually from relatively insignificant, very low probability to something a bit more substantial. Not our base case, but something more substantial. So we added more yen and US dollars into the portfolios to give a degree of protection against that kind of emerging risk. So it's something we're always thinking about and factoring in, and something we'll be making changes all through this lead up to the actual event.
Thanks, Shaun.
Thank you, Casey.
And thank you for joining us. And thank you, Richard, for this month's question. Next month, if you'd like to have your questions answered by the investment team, please do drop us a line by email, social, or the comments section below. Next month, Shaun will be taking a well-earned holiday, and we'll be joined by Brad Holland, our Director of Investment Strategy. We look forward to seeing you then.